Hey everybody, welcome back to Financial Thing. We have a Saturday live stream today, impromptu but planned because Thursday's live stream was a complete cock up. Hopefully the audio is working correctly now and you can hear okay. Saturday, yeah, normally don't do it, but wanted to do it because wanted to put out the information out there for everybody who probably wanted to see it or listen to it on Thursday, and that didn't happen. So here I am. Didn't really want to do it, to be honest. It's Saturday. There's things I would rather be doing on a Saturday. But then again, being here and presenting this information for you is very important to me. So I made a commitment myself to do it every week. So here we are. I'm glad you're here. Glad you're able to join if you're watching this in the future. I hope you find this information helpful. And please hit that thumbs up and subscribe to the channel if you haven't joined the Facebook group, the Financial Thing Facebook group. If you haven't already done that, we have a few good posts, posting great information in there, and some back and forth about cryptocurrency. We have the detractors, we have the supporters, and there's always a healthy combination of discussion in all things investing in there, which I really like. So what are we going to talk about today? We got some peer-to-peer lending news. We're going to do our loan pad update. We are going to look at some index tracker information, and particularly I've been getting a lot of emails recently over the last I would say 3 weeks, people telling me, oh, you should look at the UK tracker, the FTSE 100 tracker on Vanguard. It's been doing really well over the last year. Why don't I invest in that? Why don't I support that tracker? So I'm just going to show you some information about that tonight. The reason that I don't particularly like that tracker, I'm going to show you why. And we're going to talk about some cryptocurrency news at the end, what's going on with that. Obviously, we have this tracement of the price just really kind of bouncing around between 41,000 US dollars back down to 34, 35 US dollars, 35,000. And I think it's going to be like this probably for the next month to 2 months. There's a lot of false information out there running in the media about Bitcoin, and that's kind of normal when things like this happen. So thank you again to everybody who is here live watching the stream. Just say a quick hello to everybody. If you are watching live and you want to let me know where you're from, like you do always, please do so. Peter Vince is the first one in the chat today in Leatherhead. Richard Weber, nice to see you. Thanks for joining us, Richard. Yes, I'm doing very well. Hope you are too. Debbie is here in the Cayman Islands. What a great place to be, right? The sweaty Cayman Islands. I wouldn't mind being down there. Mark Mason is here. Thank you for the audio feedback. Appreciate that. Norman in Cloud and Cold, Sussex. And yesterday your volume was okay for 5 to 10 minutes and then it went weird. Yes, it was a conflict between some software that I had updated on the old Macintosh. For everybody who's my age will understand that. But today, hopefully it sounds better. And Annabelle Nairanzola, welcome from Spain. David Alderman in the Chili Chilterns. And yeah, of course, I'm happy to sacrifice an hour for you on Saturday. I'm going to try to get it done in an hour. We have a lot of stuff to go through today. Michael Shaw from Battle. And Tony Walton from an overcast Somerset. Thanks again for being here. I appreciate the support. Again, hit that thumbs up. Subscribe if you can. Tim Porter is here. Good afternoon to you, Tim. Thanks for joining. Also, if you have questions or comments that you want to get feedback on, put them in the chat, and at the end we'll do a quick Q&A. Please try to get out of here within an hour. So let's get right to it. George is here in Birmingham. Welcome, George Batchelor. Let's see what we got going on here. Let's go ahead and close this out. Share my screen. We'll go through the news. Oh, sorry, George, you're from Bridlington. For some reason I saw Birmingham. It's where my grandparents are from, so I would see Birmingham for some reason. I don't know. Okay, let's get to it today. Oh, just quick shout out to our sponsor here, Kuflink. Again, you know I'm an investor in Kuflink and their loans. not in the business, but in their loans. I like the company, and you can get $4,000, up to $4,000 in cash back if you're a new customer to them. Go ahead and you can go to the financial thing website. I have banners up there. If you click on that, you can get the qualified cash back, and it helps me as well. That is an affiliate link. And just don't forget that you got to be a new investor to get the cash back, and terms and conditions do apply, and it's not covered by the FSCS protection, and your capital is at risk. But again, thanks to Kuflink for being a sponsor of the channel. LoanPad, let's talk about LoanPad. So what I like to show you is the data feed here, because I think this is very fascinating. Again, if you're not a customer of LoanPad, I think it's one of the very, very good peer-to-peer lending companies out there. And what I most like is the liquidity of the platform. It's always been less than a day to sell your loans and less than a day to get invested. You can see the loan book right now is at £33.3 million, and it's steadily growing based on a total loan value of $72.4 million. They have 91 loans now. And again, this dashboard and this live data feed has really good information that's updated daily. You can just really see the stats. This is the provision fund of what's committed out of the £40,000 provision fund. Very small provision fund. I mean, as peer-to-peer lending goes, this I think is a testament to the quality of their loan book. But LoanPad doesn't feel like they need to have a huge provision fund, because the loan quality is high and the average loan to value is low. So only £21,000 of the provision fund has been used. I'm going to try to keep an eye on the chat today, because I know I got a lot of thumbs down last time and I wasn't really paying attention to the chat because it's hard to see it on my screen. But yes, this is LoanPad, so that's really, again, moving in the right direction. So next, let's talk about Funding Circle. They have sold some loans on the US market. Very big company, Funding Circle, so sometimes they package loans up, sell them for a profit, which they did. It was about £63 million in loans. They made a £4 million valuation profit on the loan sale. You also might recall they've done that too with bad loans. Sometimes they have loans that go into default and they want to try to get something back for them, so they'll sell them onto a debt collection company and usually write down those loans off of their book. So that's happened to Funding Circle. This is very interesting. So Crowdcube founder has joined PLend. This is a new peer-to-peer lending platform that is really trying to transform the way that open banking uses credit checking to assess people's worthiness of being approved for loans. And I've talked to both of the members of PLend, I think maybe about 3 or 4 months ago, Robert Pascoe and James over there. So they've managed to get the Crowdcube founder to come on board with them, which I think is a good thing for them. Darren Westlake, who Crowdcube founded, I think back in 2011, he's coming on board with them after 12 years with Crowdcube. So PLend will probably launch, I think, towards the end of this year, and it's a really interesting business model. Again, I'm sort of really trying to learn more about what that peer-to-peer lending company is going to be doing, but they're saying they're going to be able to offer rates of about 10 to 11% a year on the peer-to-peer lending space for investors, which is high. So you always know that I'm a little cautious when it comes to anybody that's offering these higher interest rates, because we've seen it in the past. The companies that have been offering 10, 11, 12, 13, 14% really run into problems. Not to say PLend is going to be one of those companies, because they have a very different business model when it comes to credit lending. And I think that's pretty cool, so we'll see what happens with that. Look at this. Whenever company accounts are released for peer-to-peer lending companies, I always like to see where they are financially. We had a couple of companies that released numbers recently, one of them being Archover and the other one being Relendex. So Archover has said that it has narrowed losses and increased their lender base. So they've, let me see if I can zoom in this a little more here so you can see it. but they've reported for the year ending 2020 operating loss of 535,000, which is down from a loss of 1.5 million in 2019. It's always good to see a decrease of losses, but you also have to look at those numbers as a whole and say, wow, what are the actual total losses of these companies accumulated? Because that's a hard hole to dig out of, and I'll show you why in a minute. And one of the other things that I thought was interesting about the news story is here. 3,464 lenders were registered on Archover by the end of 2020, up from 3,328 lenders registered a year before that. Now, that doesn't really show a lot of growth. If the operating loss has decreased and the growth is increasing, but what I want to see with these companies is more of a growth upwards, and you haven't really seen that now. Of course, a lot of that is going to be due to COVID and what happened and the fallout from that. But operating loss of $500,000 down from 1.5 million shows that there is a lot of debt going on with that company. And the thing about Archover is, the reason why I haven't been particularly interested in them is the £1,000 minimum per loan, which you really need 10 to 15,000 invested in that one single platform just to be correctly diversified. And personally, I don't like putting too much into one single platform for obvious reasons. If the company fails, then having a lot tied up into that company is very detrimental as an investor. So again, the other company that reported actually a profit was Relendex. The problem is the profit was only £135,760, which, while is very positive in the fact that they did make a profit, the problem is, look at the losses since inception, since they launched. £5.77 million of losses. So that little £135,000 profit has really chipped away a little bit of those losses, but that's a big hole again to be coming out of as a company. If you made £135,000 profit, what is the actual possible profitability? Again, we'd have to look at the actual reporting numbers on Companies House to dive into how much were the expenses, what did they spend their money on, and that's a very long topic of conversation. But if we look at basic numbers, currently £5.77 million in losses for Relendex. Again, not saying anything bad about the company, but it's something to pay attention to if you're an investor in Relendex. You do want to pay attention to these company house numbers just to see where they're at. Ideally, you want to see a company that's in the green and doesn't have massive losses previously. And some companies do have large losses because they're in growth mode. Relendex, I don't know what their growth model is, but a company, for instance, like Assets Capital has some substantial losses because they are in growth mode, and they're a much bigger company. Relendex, you're talking about decreasing its headcount from 16 employees to 14. Assets Capital probably has a staff of, upwards of 100 people, so much bigger company. Just something to pay attention to, again, if you're a investor in Relendex. ThinCats has received £160 million of Kuwait-backed investor money to scale up their SME lending. ThinCats is a very, is a little bit head-scratching for me, because on the one hand, you've got this separate arm of the company that's in administration for ThinCats, their retail peer-to-peer lending side, and then you've got their institutional, bigger side of their lending, which is separate, which has now taken on £160 million investment from the Kuwait-backed Wafra Capital Partners, WCP. And this story says WCP is the New York arm of Wafra Inc., an investment firm which is beneficially owned by the Public Institution for Social Security of Kuwait, an autonomous agency controlled by the state of Kuwait. I don't know. I mean, speaking honestly, it seems a bit strange, but they want to be able to help the platform lend up to £2 billion of money to UK SMEs, small and medium-sized enterprises. And I guess that ThinkCats decided that that was the way for them to get that capital, even though it's from Kuwait. Not saying anything bad about Kuwait, but something to pay attention to, again, if you're an investor. Oh, well, you wouldn't be an investor in ThinkCats, but you might have been an investor in their company that is in administration. So we're going to do a little talk about, one other news story too that you might have seen if you're an assets exchange investor is they've put caps on, let me see if I can find that story. They put caps on the increases of the prices of the property on their market. So let's see. They set out a press release which said, we've seen a surge of new signups and deposits onto the platform over recent weeks, which has led to aggressive price appreciation on a number of properties on the platform. So this is with the way the secondary market too works. You have prices which are set by the market. So a lot of the times when it's like that, we see this sometimes with companies like Cedars, where people will buy shares in equity shares in companies and then list them for 25 or 30% higher. Very capitalistic, of course, but sometimes can be problematic because you have these really big price increases, and again, it's based on demand and supply. If you're a peer-to-peer lender and you're trying to get into assets exchange and there's nothing available and you want to buy on the secondary market, then what's going to happen is those secondary market prices are really going to shoot up and you're going to end up paying a lot more than what the original price was. So they've seen some properties have had double-digit price increases in a matter of days, which is something Assets Exchange doesn't want to see. So because of this, they brought in temporary price caps on properties, typically 10 to 15% above the price a Assets Exchange purchased the properties for. And they're going to really monitor that. And they say we understand it's a frustration will be caused to some investors, particularly to new investors who may find there are less properties they can invest in. But our goal is to protect investors so they're not paying an unreasonable price for their parts that they're buying into these properties. Again, that's going to be a demand and supply thing. Assets Exchange probably doesn't have enough deals coming in to where new investors can invest in, so you're seeing that market demand really surge and the supply is not as high as they want it to be. So they're keeping an eye on that situation to make it fair, which I think is really good. I like to see that companies are really paying attention to what's going on in their marketplace. Let's see, Philip is here in Milton Keynes. Very nice to see you today here, Philip. Thanks for joining us live. Norman P says, your email today said you had another interview with Assets Exchange. You started investing, and Peter's been really helpful getting me started. Yeah, you can watch the interview. It's archived on the YouTube channel. Peter has been very, very open and transparent, good communication. So very, very happy with him so far. So let's talk about a little bit of crypto news right now for anybody that's interested in cryptocurrency. Peter Bailey, Bank of England governor, has said digital money could lead to a rise in non-bank lending. You are going to see a government-backed digital coin at some point. I have no doubt in my mind this is coming, and what they are concerned about is that non-bank lending is going to suffer. Now, here's the thing about the banks, right? The banks are never, or I shouldn't say never, most of the big banks, they're going to create their own digital coin eventually. And also, they don't want you as an investor to invest in crypto assets like Bitcoin and Ethereum because, number one, a bank makes money off of you from your money sitting in a savings account because they're able to take that money, they're able to lend it out. Even if it's just overnight, they can get very small fractions of interest percentage points on your cash that you don't get paid anything for. I mean, you're getting very little in interest rate. So the more money, number one, that you have inside of your bank account, the happier the bank is. And the bank doesn't want any competition, especially for lending. In the future, what you're going to see is people that own crypto assets are going to be able to lend out money to private individuals through smart contracts. You'll be able to use your crypto assets as collateral. You can do it now. It's still in its infancy. But the last thing the banks want is things like peer-to-peer lending. They hate that. And they hate crypto assets in most cases, because anything that takes competition and adds to competition and takes business away from them, the banks are naturally going to hate. Now you got the Bank of England, Andrew Bailey, who I would say would probably never be a supporter of Bitcoin, but they are recognizing that digital assets are becoming important. So they do want to create eventually a digital coin, probably a stable coin that they say will be backed by assets. Don't know what that's going to be. But I would see continued negative talk from banks, most banks, against crypto assets. But there are some companies that do understand there is big demand for crypto assets right now. Some of the big investment companies are now releasing future trading, options trading, ability for people to get access and have exposure to cryptocurrency through funds. We're seeing VanEck, who has released an ETF of a digital currency ETF for exposure to companies that are doing things like mining cryptocurrency in Europe. ETF has been released, I think, in May, and they're trying to get it released in the USA. And then you see companies like Grayscale, who is a fund that offers you exposure to all kinds of different cryptocurrency and different funds that they have. And they're just going to continue to increase. They're looking at other funds with other coins. So, cryptocurrency, digital money is here to stay. You're in the very infancy now. You're seeing these prices of volatility continue, as they will, I think, for a while until things settle down. And again, if you are somebody that thinks, well, Bitcoin is just too expensive right now. It used to be 3,000 US dollars. Now it's 37,000. It's just too late. No, this is the very, I would say, if we look at things in stages of maybe stage 1 through 4, where 1 would have been very, very early adoption when Bitcoin was, practically unknown. I would say we're in between probably level 2 at the moment, to where you haven't quite seen mass adoption, but you've seen a boom in ownership. And the Bank of England is starting to pay very close attention to what's going on with that. And they're going to be focusing on really creating some kind of a digital asset. And you can see that here with this other news story. The Bank of England lays out its principles for centralized digital currency. Now, here's another thing that is very important to pay attention to. The reason why Bitcoin is very much liked by people that want to separate their assets from government control. Now, when you own stocks and shares, remember that the stocks and shares are not necessarily controlled by the government, but the markets are through regulation. And Bitcoin, while I'm sure it will become regulated at some point, but for now, it's very much separated from government control. Even if Bitcoin does become regulated, it would be almost impossible for a government to control anything to do with the price of Bitcoin, because it is decentralized. There is no way for a government to control it. They could ban it. They wouldn't be able to ban the Bitcoin, but they could ban platforms that sell it. They could ban payment processes, like they did that with online gaming in the US with poker. I think it was back in 2011 where they shut off payment processes. But that's really not going to make a whole lot of difference to Bitcoin in the long run, because all over the world people own it. And there's really no way for the government to control it other than trying to maybe shut down different pieces of payment systems. And I think at this point it's just become too big now. I mean, you've got corporate companies coming in who own billions of dollars of Bitcoin. We had MicroStrategy saying they're going to buy another $1 billion worth soon. Maybe they already have. So it's going to be very hard for the government to control it in that respect. But here's the story. The Bank of England lays out its principles for centralized digital currency. So again, it is coming. And here's the principles right here. Let's zoom in a little bit. Financial inclusion should be prominent consideration in the central bank digital currency design and competitive ecosystem with diverse participants, blah, blah, blah. The currency should do no harm to the Bank of England's ability to deliver monetary and financial stability. And they said that the bank will soon reveal more details on the plans that Chancellor Rishi Sunak had previously announced. There will be a digital coin engagement forum for senior stakeholders on practical challenges of design, implementation, and operation of the digital coin. So yeah, they're going to be focusing on it, and I think that in some ways, the UK will probably like to be at the forefront of some kind of a digital currency because they are tech friendly. You know, we've seen fintech has been a place where it's really thrived in the UK, even though yes, there's been some ups and downs with it with the peer-to-peer lending side. So on the other side of that, here's a story that said hardly any independent financial advisors would recommend crypto investment, which is really interesting because at the bottom of the article it says 33% of independent financial advisors said they believe cryptocurrencies will become a legitimate investment vehicle in the future. And I think this really shows a misunderstanding of the currency in general, the cryptocurrency space. And one thing, you know, I'm kind of a basher of financial advisors. I always have been. And these are the same people that are going to tell you do not buy index trackers because they don't make any money off selling index trackers, and they don't make any money off people buying cryptocurrency as part of their investment portfolio. So it's natural, of course, that they're going to say they would not recommend crypto investments. So you have to be very careful when you're taking advice from financial advisors and think, what is their real motive behind what they're selling you? You know, what is their fiduciary responsibility? Is it to the commissions that they get annually from the funds that they sell you, or, you know, are they doing fee-based advising? And again, cryptocurrency very grossly misunderstood by financial advisors, as are index trackers. You know, I've talked about the story of a conversation that I had with a financial advisor where they said, you know, Lawrence, why are you investing in index trackers? They are far worse than managed funds because the managed funds are controlled by experts and they pick out stocks and they know which stocks to buy and sell. And when I had a conversation with that by a very, very experienced financial advisor who'd been in the business for close to 40 years, I knew then that I couldn't trust what that financial advisor was telling me because the information that he was giving me was completely incorrect. And I showed him the numbers. I sent him the numbers and said, look, what you're telling me, I'm showing you a lot of managed index funds, a lot of managed unit trusts and funds that have grossly underperformed index trackers, and here you're telling me that this is not something I should consider. So at that point, I knew that at least with him, I couldn't trust what he was saying. So you have to be, again, very careful what you listen to when it comes to financial advisors. A lot of cases, they can provide great tax information and for planning purposes, but on the investment side, yeah, be careful. Let's see. So they had a survey of the FCA. Over 2 million adults now in the UK hold cryptocurrency. Crypto awareness in the UK has risen, but understanding has fallen. Yeah, this is a big problem. A lot of people don't really understand what they're investing in. There's now over 10,000 cryptocurrency projects out there that have coins that can be invested in. You have to be very, very, very careful. This is why I really tend to stick with the main coins that I understand, like Bitcoin and Ethereum, because I know there's a use case for both of those coins. We see it, and Ethereum is, you know, so many companies are built upon Ethereum. We see things about NFTs, which I'm not a big fan of. But we had a collapse of a coin this week called Titan, which went, I think, from $65 down to pennies. And a lot of people lost a lot of money in that because they didn't understand what they were investing in. That coin was offering interest returns of, I think, 2 to 5% a day, which is unsustainable. Yeah, so please be careful. But the thing about this article, and it really doesn't tell the whole story, but what is interesting, it says in the UK, 2.3 million adults now hold crypto assets, up from 1.9 million last year. A lot of that is because of the media showing what happened with this boom, and then we had this sort of crash of the crypto market. But the median holdings are only £300, which is 420 US dollars in 2021 versus £260 in 2020. So very small amounts of average cryptocurrency. We tend to have most people who are knowledgeable about crypto assets and are very selective about what they invest in, they tend to invest more money, while you have people that are, we call it FOMOing, fear of missing out. So they see the news stories about this crypto boom, they jump in with a small amount of money, and then they kind of get stuck with their holdings, or they sell it, panic sell it, because they've seen the prices go down a lot. So a lot of people owning very small amounts of crypto assets, but you'll have a small amount of people that own large amounts. Those are the people that tend to understand the market better. But it just shows the rise in popularity that is happening. And again, I say we're in the very, very early stages of crypto assets. Still a lot of misinformation out there. One of the things that I often get questioned about is the energy usage, and I posted something on the Facebook group about energy usage and how I get this all the time. Let me see if I can show you this graphic. Hopefully it will show up here. Maybe a little bit too big for the screen. Let's see. This is Bitcoin's comparative energy consumption annualized. This was a study that has been done by BP Statistical. You can see the source. If you Google, you can Google block cap energy consumption chart, and you will be able to see this graphic. This is from 2017, so it is a few years old. But the reason why I go to this number is because this bottom number right here, 120 terawatt hours per year consumed by Bitcoin on the world's electric grid, compared to a total of 160,000 terawatt hours generated, and 50,000 of those terawatt hours are lost due to inefficiencies. Those inefficiencies, things like flaring, where gas is flared off by oil companies, and also transmissions through the electricity lines. Some of that electricity is lost, so we lose a lot. But this number right now is about 127 hours, so it really hasn't changed much from 2017 in 4 years. They're saying Bitcoin consumes 0.25% of the energy wasted of this 50,000 terawatt hours, and we have more companies that are miners moving into green energy. Bitcoin uses less than 0.1% of human energy produced worldwide. And this is a more recent article that was released in March of 2021. Let me try not to cover that up. But it's an interesting article on Forbes. Bitcoin's energy consumption is a highly charged debate. And there is a number in here. Where is it? Let me see if I can find it. Oh, here we go. So the division of Cambridge Center for Alternative Finance department estimates that the crypto's annualized energy consumption will be around 127.48 terawatts per hour. So it's a small amount of energy that's used, and we keep hearing this argument over and over and over and over again about this usage of energy and how it's bad for the environment. But it's a little blip compared to things like gold mining, oil drilling, electric cars, tiny, and it's being used to create a decentralized, separated asset class that can help protect from inflation. So again, that argument just seems to be very mute to me. And as time goes on, Bitcoin miners will find better ways to mine it that are more efficient, that are greener, that they're going to use part of that wasted energy. We see El Salvador now bringing on this currency as legal tender. not supported by the World Bank, of course, but the World Bank has no interest in seeing any country adopt Bitcoin because it means that they're going to be separating themselves from needing the World Bank. And of course, the World Bank doesn't want to support any country that is looking to separate. And the US government doesn't like it because it's moving away from the US dollar, which they're so reliant on other countries using the US dollar. It's good for them. So we're going to see that, of course. And then this is the interesting news about Elon Musk tweeting out about when Tesla will accept Bitcoins again. He's been back and forth about, again, the energy argument, which I've said before, how much energy is being used to create parts of these batteries that are going into these electric cars. It's going to become a huge, huge problem. If you think Bitcoin's a problem, electric cars, massive problem. VW going all electric, I think 2026. How much electricity is going to be needed to power the biggest car companies' cars in the world? It's going to be huge, and this is far more impactful in a negative way. Pro Basketball League in Canada will offer players Bitcoin salary again. Just another part that showing Bitcoin adoption and people that understand this as an investment. Quote from one of the basketball players: "The ability to have part of my salary go directly into an investment that I believe will appreciate greatly over the next 10 to 30 years is a no-brainer." So that is pretty cool news. And let's see what else we have here. Oh, okay, we're gonna do a quick update on the trading 212 portfolio, the one that started with 5,500 pounds in it. I'll show you. We did make a couple of changes this week. I'll show you what those are. Here is the portfolio. Let me bring this up for you. Again, been doing pretty well, absolutely smashing the index track. But again, this is not normal. These conditions, what we're seeing in the stock market right now, not normal. I think it's going to continue for the next year. As long as all this money printing continues, and the inflation is going to rise, but the governments have no choice but to continue printing now at this point, and they're going to keep those stock markets propped up. So here is the portfolio. We are right now at 14,267 pounds, so almost tripled the portfolio. Remember when we first started out with the portfolio, it was tech heavy. Now we're into oil and energy. I think that we're going to see oil prices probably close to $100 US per barrel, which means that oil companies are going to do well. Changes in the portfolio. This week we went heavier into this Bonanza Creek Energy and sold off some of this Microvision that hadn't done really well. Probably not a good idea selling, but I think it was at a 5% loss. The price had bounced back. You can see right here, average price paid was 21, a little bit under 22 US dollars, and it bounced back. And I think I sold out right here, half of it, just to put more money into these energy stocks, because I think they're going to do better than what I think this Microvision stock is going to do over the next year. So went ahead and did that. Sold some of the Lloyd's Bank, took profit on that. Now, you can see, hopefully you can see this, but it was up 82%, but closer to 100, and I didn't quite catch it at the top, which is what I always said the price target was going to be about 50p, and it was very, very close. Actually, it just topped out over 50p, and that should have been the selling point there. That should have been the profit-taking point, but I missed it, and I waited, and I think I ended up selling about 47p, so about 10% less than what I would like to, but I got rid of about 1,000 pounds worth, and took the profits and bunged some more into Tullow Oil, which is up about 10%, and then put some more into Bonanza Creek Energy. Again, very, very heavy into the oil and energy space at the moment. I think commodities, if you are interested in stock investing at all, you're going to see a lot of talk about commodities, gold, oil, energy being a good sector to be in. Again, I don't advise, this is not financial advice, by the way, to anybody watching. This is just me goofing around with this portfolio to see what we can do with it. And I mean, you could see too some of the negative reds here. The cannabis stock, which is almost down 30%. Very, very risky trying to pick out these sectors. I think I've gotten very lucky with timing. I've gotten it wrong too many times. I've just happened to have gotten very lucky with this timing into oil when it was low. Oil is almost doubled. But you can see the Aurora cannabis, thankfully didn't have too much in here, is down around 27.36%. But the portfolio in general is doing really well. And what I'm probably going to end up doing with this is giving a portion of the profits away to charity, because again, this is just an experiment. And I don't know what charity is going to get some of this money, but somebody will. So we're going to run it for a year though, until September the 24th, 2021. So we got another couple of months left to try to really increase this portfolio. I hope we can give some money away to a well-deserved charity from the profits that have been made on that. So I'm excited about that I get to give back. Let's talk about index trackers. Again, I have had a few emails from people saying, I should be looking at the UK index equity tracker and the FTSE 100. You know, some people are very patriotic too. They like to invest in the UK, and personally, I tend not to. I do have a couple of UK companies in here in this portfolio, but that's unusual. I tend really never to invest in UK. I have the Lloyds Bank, the Centris, Tullow Oil, and I also had another one, Ceres Power, which I ended up ditching also this week because it wasn't doing very well, so I got rid of that. That was a UK company, but Tullow and Lloyds Bank are the only UK companies I own. So let's look at the numbers and see why people have been saying, why am I not pushing the UK index tracker? And the information that they're saying is very short term. So right now, if we look at the price of the UK, this is Vanguard FTSE UK equity tracker, accumulation, not income. So the price is £258.98. And I'm going to go back to when I first started the Trading 212 portfolio, which is September the 24th, 2020. And we're going to look at the price of what it was back then. So page 19, that would be September the 24th. You can see right here, the price is £206. So it's done pretty well. If we look at that increase on the calculator, we're going to see here from 206 up to 258. That's a 25% return, which is really insane. I mean, for an index fund to go up 25% less than a year is huge. Very, very abnormal. And it's done better than the US index tracker. We look at the numbers on the US, we started at 565 pounds. Let me make sure I got these. Let's look at page 1. Right now, 677 US, 677 pounds. Let me drink because I'm obviously getting a little dry here. So we're at 677 pounds on the 18th of June this year. We look back to September the 24th, we're at 554 pounds. Again, really good increase. Very happy with that. That is an increase of 22.19%. So you can see the US index equity tracker is a little bit behind the UK right now. But the bigger picture is this. If we go back 5 years, and I usually like to go back way more than 5 years. I don't think 5 or 6 years is really a long enough history to be looking at any investment. You want to be looking 10, 15, 20 years, look at the history of that. But if we look back to September the 24th, 2015 of the UK index tracker, let's go all the way back. We're going to see a price of £205 and 24p, right? 6 years, a little bit less than 6 years. So we go back to today's price, £258. So what would that equate to over the period of 6 years, you'd be looking at a return of 26.18%. So is that good? Methinks not. If you look at the US index equity tracker over the same periods, we go back to 2015. So 677 is our today's price. We go all the way back to 2015 September, 260 pounds. So we have seen more than a double, way better percentage increases from 260 pounds all the way up to 677. So this is the reason why I've been a detractor of the UK equity index tracker. Now, it's not to say that this can't change in the future. We have absolutely no idea historically how it will do in the future. Nobody knows, but all we can do is look at the historical numbers, and the historical numbers show that the UK FTSE has always underperformed long periods of time the US because of just the nature of the beast. Now, the reason why I'm not particularly enamored with the UK equity fund, if we look at the portfolio, it's only got 76 stocks inside of it. Right here you can see 76 because the benchmark is 75. So the FTSE fund, that the tracking index has 75 shares. You can see some of them here. Glencore makes up 5%. Unilever, GlaxoSmithKline, National Grid. There you go. HSBC, big UK companies, but only 76. It's not a big amount. If we look at the US index tracker, you have exposure to a much, much larger fund of shares, 3,748. So again, these are going to be the biggest companies in the world: Apple, Microsoft, Amazon, Facebook, Alphabet, that's Google, Berkshire Hathaway, JP Morgan, Tesla, Johnson & Johnson. You can see the exposure here to Visa, Home Depot, Procter & Gamble, Disney, Bank of America, MasterCard, PayPal, etc., etc. And now, while the exposure, you can see, gets a lot smaller as it goes down, because that's the way the index is made up. The index obviously has a bigger weight to things like Apple, which is 4%, 4.5% of the entire index, and then Microsoft at 4.3%, Amazon at 3%, so on. You're going to get a better range of exposure going on down the line than you are with the FTSE index tracker, which is why I just am a bigger fan. Now, again, if you wanted to get exposure to the world, you could do that with a world tracker. Fidelity has an excellent world tracker which encompasses, I think it's 60% US. You're going to get some exposure in other parts of the world, and I think that's a really good choice for a lot of people, who may not be so bullish on the US like I am. So that's the reason why I'm a detractor of the FTSE UK accumulation fund. By the way, you can also take that in income on either of those shares if you want. There really isn't much benefit to the income versus the accumulation because the distributions are small, right? Actually, sorry, I take that back. On the FTSE, the distribution is, semi-annually at 4.46% gross interest. So you're not going to get really a great yield. If you look at the accumulation on the distribution, you get 4.3% of that, and I think that is annual too. So not much difference between the income and the accumulation. You get about you get 0.16% more dividend on the equity income on the income distribution side. So, and you just get paid out twice a year instead of once a year. So you don't really have much of an advantage dividend wise. So I always go for the accumulation on the fund. You can see the US one distribution. You're going to get a much lower yield here on your dividend, 1.16%. So income, you will get 1.17%. So again, no advantage at all to taking the income class versus the accumulation class, but you will get more of a yield on the UK, but you're going to suffer, I think, in the growth of the portfolio of that index tracker. So that's why I recommend that. Let's take a quick look at what's going on in the crypto market today. You can see the market cap is still 1.5 trillion US dollars. Bitcoin's been sort of trading sideways, doing a little better today. Let's have a look at the one-day chart. Yeah, sort of bouncing around. Friday up 36,000. We saw this drop, but still bouncing around over the last 7 days. Just seeing a little bit of a jump here and then right back down again, which again, not completely surprised about. Just the way it is at the moment with the markets and the way they are, as it is trying to stable itself out. But I still don't think that I wouldn't be surprised to see $100,000 by the end of 2021. That's my guess to what's going to happen. Of course, absolutely no idea at the end of the day, but there is that. So I have rambled on. Did I make it under an hour today? Let's see. Oh, 56 minutes. Here we go. Let's go through some of your comments again. If you hit that thumbs up if you're enjoying the stream and the information. Again, don't forget to check out the sponsor, Kuflink, right? Yeah, it's Kuflink right there. Let's see. Archover, Norman P. Archover had problems with a few loans in 2019, but now the loans are going in second. Again, that's demand and supply. Too much investor money, not enough loan supply. Mark is here. Mark Burnett, nice to see you. Thanks for joining. Hi, Akichak, nice to see you. Archover is owned by a big insurance group, so should be sound. I have a loan that defaulted 2 years ago, and they're still trying to recover so far without result. Yep, absolutely understand that. Titan token goes from 60 US dollars to zero. What a surprise when they're offering yields of 600%. Another crypto scam. Even Mark Cuban was scammed. This does not in any way help the crypto story. No, it doesn't. But I mean, again, that goes along with chasing yield, and this is something that I talk about in peer-to-peer lending. If you're chasing interest rates and you're not paying attention to actually what the company is based on and what they're doing, you're probably going to get burned. Yeah, 600% yield is ridiculous. Max Headroom is not in the house today. Hacky says, just imagine the energy used when 90% of us are driving electric cars. Yeah, I mean, all of this talk about Bitcoin being bad for the environment, and I'm thinking banking and using computers, home computers that you leave on at night, and electricity usage for air conditioning and heat, and electric cars are just, they eclipse massively the uses of Bitcoin. It's just such an old argument. Have you ever covered pensions, Lawrence? Thoughts on these? I'm in the UK. You have to be a little bit more specific, Mark, when you say pensions. Tell me what kind of things you're talking about, because that's such a huge topic. Personally, I think pensions, the way I foresee a most efficient way of doing a pension, again, this is not advice, this is just the way that I personally do it, is put as much money as you can in an ISA, do your own investing, invest in your own products and invest in what you decide to invest in yourself, and then use it as a pension that way. I know some other people use things like Legal & General. I've had bad experiences, from Prudential. My dad signed up for a Prudential retirement thing in the 1990s, and it just, the percentage return on it was just really poor compared to what he could have done himself. Just even if he had invested not in an ISA and just in a regular account, picked out his own investments, he would have done so much better, because the fees in those pensions are so high. Yeah, Mark says regular banking uses a crazy amount of energy. Absolutely. Hi, Alan. Nice to see you in the stream. Yeah, so I think that's going to wrap it up. We're a little bit under an hour. Going to get out of here, and we'll be back on Thursday. every week, Thursday evening at 7:30 p.m. and we'll wrap up the peer-to-peer news and see if there's anything interesting happening in the markets. That's really it. Thanks for being here on a Saturday. I hope you enjoyed it. I am going to go outside now and try to get some sun on this pasty white skin. So you guys have a wonderful weekend. Be safe out there, and I'll see you on Thursday evening. Take care. Bye.